Hey traders, in this week's weekend review video, I want to discuss the trade that I took on Dollar Canada earlier in the week and really talk about the thought process behind the trade and why I decided to execute it, and a little bit about how I managed it as well. I also want to address a question that I received from last week's video asking me about when is the best time to trade as far as time of the day, days of the week, and months of the year. So all that in this week's weekend review video. Hey traders, Akil Stokes here, Chief Currency Analyst at TradingPower.com, and thank you once again for joining me for a weekend review. Live room members, that introduction was especially for you. As you know, I've had a massive week in the markets, and well, as we talk about each and every day, we want to celebrate all wins, no matter how big, no matter how small. So that's my 10 seconds of celebrating. Now it's time to get back to business. One of the trades that made up this massive week came on the dollar CAD, and it was a somewhat of a controversial trade. I say that because the week before, I was looking at, I had a completely different view on the trade. Actually, we were looking on the daily chart. We were coming back in the major structure. We had a bearish ABCD pattern, a bearish Gartley pattern completion. The market was starting to consolidate, and everything was screaming sell, 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 sell. Well, after doing nothing for the week, I kind of had a change of thought and fired off a long trade and got on the right side of the market, was able to catch that big breakout that we saw on Wednesday. So what I want to show you is a video that I sent to my syndicate members the night before, Tuesday evening, literally minutes after I fired off the trade, walking them through the thought process and really the technicals as well of why I took the trade. So hopefully this will give you guys that maybe just saw it on TradingView a better idea of what I was actually looking at. Now, what I'm looking for on this pair actually comes on the lower time frames on the 4-hour chart. And again, it's interesting because it's not the typical approach you would see from me, but we have our structure level here. You can see my DSRs are in. And we've essentially come to this structure level. We haven't got to the high parts of it. We've come to this structure level and we've just consolidated. Now, in my opinion, if we were going to see, and it doesn't mean this always happens, but if there was a massive amount of selling pressure up here, I think we would have saw a retracement already. We would have saw the market come to this level, respect it, and fall back off into structure. Now, again, that can still happen, but there's a battle between the bulls and the bears here. And I think we can go a little bit higher. The highs of our structure are right up here, right around 128 flat and really 128.36s. And based off what I'm seeing on the 60-minute chart, I think we can put in a higher move. And here's what I'm looking at if I zoom in. I'm looking at this consolidation, again, market coming up. We essentially consolidated in this area here, this zone here. You can draw it like this, a little flag pattern, or you can draw it straight out. It doesn't really matter. The point is, looking at most recent price action, here's what we did. Our previous structure high is right here. This was the highest point. This is where the market rallied up to before losing some steam, before buyers started taking profit, before sellers started getting involved, however you want to look at it. But we recently did this. We looked swing low to swing high. Right, we tested that level, got rejected. That's a good sign for the sellers. We then put in a higher high, higher close, right? And that could be a false breakout. We put in a higher high, higher close. We retraced back down here, and really, this is the move that I'm paying attention to. This was 9 o'clock. At 9 o'clock, we had, where's my thing at? Here we go. There we go. 9 o'clock or 8:30 today, so it would have been in this candle between 8 and 9 o'clock. We had what was it? Retail sales come out for the dollar, and it was a bad number for the dollar pair, I believe. I actually haven't looked at it. I'm assuming it was a bad number. Let me give me a second here. Let me just check my Forex factory. I think we got a bad number. Core retail sales, yeah, we got it. We didn't meet the forecast. Wow, it wasn't good at all. So we got a bad number for the dollar, and we saw the dollar show some weakness this morning across the board. We got sucked all the way down, but look what happened. Whoop. We came back up. This is a clue to me that there are some buyers protecting this level. The fact that we got a bad number and we couldn't break back down really into this channel, we held our outside return right here. For you guys familiar with how to read a price chart, we held our outside return right here. shows me that this level may be protected. So I was watching this chart. I was doing my top-down analysis. We came back down it right before the close. We actually closed on this candle right here, and I took an aggressive entry to get involved in this. Now, I took an aggressive entry because I think there's a massive amount of reward in here compared to the risk. All right, so here's the dollar CAD on the hourly chart, and I want to show you guys exactly how I managed this trade, because originally I wasn't looking for that big breakout. I was actually only looking for a move. I got involved right down here, if you remember. I was actually only looking for a move back up to retest previous structure highs. Again, all of this was based off the breakout of the range that we're in, the consolidation. And well, typically when I look for targets, I look for structure-based targets, and that was the next structure level. Pretty good risk reward. I think it was about 30 pips of risk for about 65, 70 pips of reward. An easy 2-to-1. Thought it would be a nice quick trade. However, as the next day came, I started to notice something and got some reminders about some fundamental announcements that were coming out. And the two that really caught my attention was A, Janet Yellen's testimony, and B, the Bank of Canada rate statement. Now, Janet Yellen had came out earlier in the day, and she was very bullish the dollar, essentially confirming interest rate hikes for the dollar by the end of the year, which is a good sign for the dollar. Now, I've also did a lot of reading on Canada, and I was under the impression that the Bank of Canada rate statement was they were either going to have a very dovish statement, or there was the possibility that rates may be cut. Either way, this was setting up to be the perfect storm. We had positive news coming out for the dollar. We had negative news coming out for Canada. I was in a bullish position on dollar Canada. Put two and two together, it all made sense. So as we approach this level on the charts, I sent a message early in the day to my syndicate members, and I was live with my live room members at the time. I said, hey guys, dollar Canada has moved across. It's at the level where I was originally looking to take profits. However, I'm going to hold off on taking those profits. I'm going to actively manage this because I think we can get more. And well, when 10 o'clock came, Canada slashed rates, big pop. 185 pips later, we're doing dances and celebrating. And by we, I mean me, alone in my room. But seriously, it was a good trade, and we celebrated when we got back to the live room. So I posted this trade on TradingView as well, and the majority of the feedback has been very positive. But of course, there are always a few haters out there. By the way, I love you guys. Keep the hate love coming. And I did get a few comments saying, hey, Akil, you got lucky. Good guess. Yeah, that's exactly what it was, guys. It was a good guess. What do you think we do as traders? We make educated guesses. That's our job in the market. We never know whether the market's going to go up or going to go down. Think about it. If we did, we'd throw everything. We put everything on the table. Bet the house, bet the car, bet the kid, right? The point is, we don't know. The only thing we can do is make educated guesses over and over again using a system that has an edge. And what I mean by edge, it has a statistical advantage. It has a positive expectancy. And a lot of that, and especially this trade, a lot of this comes with experience, guys. The more experience you get in the market, the better you become. It's one thing to learn how to trade, how to learn a technique, how to learn a strategy. It's another thing to really learn how to trade just by getting experience in the market. And, I'll tell you what, I have a lot of experience. I haven't been doing this for an insanely long time, but I put a lot of hours in. I work extremely hard on my craft. I always get the question, hey, Akil, how many hours do you trade a day? And traders are usually shocked. Traders are usually shocked when I say, hey, I only spend maybe four hours trading a day. And they're like, what? I thought you were in there, 12 hours, 20 hours a day. No. I do my top-down analysis in the morning. I do 3 hours of live trading during the day. I do more top-down analysis at night. So I don't spend too much time trading it. You really don't need to spend that much time in front of the charts physically trading. What I do is I spend a lot of time in front of the charts on my education, pre-market analysis, post-market reviews. I'll do a lot of reading. You can see behind you, I read a lot of books. going through charts bar by bar, bar by bar, training my mind. And of course, the live room every day, we spend 3 hours in just looking at charts. And you do that many reps in the market, you start to see things, you start to notice trends, that you start to build that skill. No difference from you basketball players going outside and dribbling a basketball if you're left hand for an hour every night. At first you're going to be very, very sloppy, very, very weak with that weak hand, but eventually you get better the more you do it. So a lot of this comes with experience. Again, it is a guess, yes, but it's an educated guess. And it's an educated guess that a lot of traders don't make, meaning that a lot of traders out there are guessing with no real reason to guess. It's just, hey, let's see what happens. I lost. So there's no consistency. And I think that's the main thing with trading. It's not that a lot of people can't trade. It's more so there's no consistency in it. They're quick to give back everything they gain, and that's what you want to avoid. You want to put yourself in those good situations. So I feel like I'm getting off on a rant. Do I want to talk about this flag pattern here in Canada? Nah, we talk about that tomorrow. Let's talk about really quick. Let's talk about the best times to trade, because a few traders shot me this question last week, and well, I believe hourly wise, the best time to trade is going to be either the London Open or the New York Open. If I was able to be awake for the London Open, I would certainly trade that. But if I had to choose a time, I would say that overlap session between the second half of the London session and the first half of the New York session. So about 8 o'clock Eastern time, New York time, to about 11 o'clock. That's going to be your sweet spot for trading. Aside from that, you're not going to get too much action. Now, as far as days of the week, Sundays are typically days you want to avoid. I typically avoid Mondays. I do my training lessons with my clients on Mondays because I have really no interest in intraday trading. And Monday, you're coming off the weekend. Really, all you have is the London traders making their opinions in the market. I like to give New York a chance to come in, see what's going on, and react before, in order to give me a clearer view of what's going to happen during the week. So I typically don't trade Mondays unless it's something longer term that I had on my radar, previously. So the best days of trading, and that goes the same for Friday. The best days of trading are going to be Tuesday, Wednesday, Thursday, the meat of the week, the middle of the week. Those are typically going to be your best days of trading. Mondays and Fridays are more, they're hit or miss, 50-50. You'll have some good ones, some bad ones. But if you're like me and you like taking time off, if you got into trading in order to give yourself free time, in order to have the ability to do what you want, when you want, I'd take an extended weekend, take Friday off and let that roll over all the way till Monday. Now, lastly is going to be months of the year, the best months to trade. January till May are good. The summer is pretty poor. And I don't mean poor by you can't make money. You can make a lot of money during the summer, but trading slows down. A lot of the traders go, they reap the benefits of their labor. They go to the Hamptons and vacation with family and what have you. So summer months are usually pretty dull. And then from September to November till about Thanksgiving, that's a good time in the fall to trade. And again, December, once we get around the holiday season, people are cleaning up portfolios. It's typically more time for continued education. So hopefully that answers your question. Now, before I let you guys go, I got a very special announcement. Many of you have heard me talk a lot about the syndicate program or my live trading room. Well, guess what? I've got a very special deal because we are still offering a free trial, or we're still offering a trial membership in our syndicate program for $1. $1 for the first month. You can cancel at any time. So if you log in, if you don't like it, just leave. $1. But here's the thing. Jason Stapleton, who runs our war room meeting for our syndicate members every morning, meaning he shares his ideas, his thoughts, what he's looking at, where he's looking to get involved at, stops, targets, all that fun stuff. He's on vacation. He's got maybe not vacation, but he's got a lot of stuff to do. So he's not going to be here for at least the next week, I believe, or at least maybe till the beginning of August. So what we're doing is we're taking all of our syndicate members, right, and we're throwing them into a live room with myself. So if you sign up right now for the syndicate for $1, you also get access to my live room for free for probably about a week and a half or 2 weeks. I got to check on there. So you may want to sign up right away, but at least for next week. So trust me, Take advantage. If you haven't been in the live room, trust me, there is nothing like it. I hate sounding like I'm pitching something, but we had a few members in there today, and it was a slow day today, and I'm getting comments saying, Akil, this is great. I love it. We haven't even looked at a chart yet, but we talked about Main Street Alpha. We talked about how to build my business as a trader. We looked at that. We talked about money management, this and this, and it's like it's just a great experience. And you know, check it out. Usually, once you come in, you don't leave, and it's free, so you might as well check it out. That is it, I think. Yeah, well, real quick, let's just go back to the Canada chart. We looked at this morning in the live room. We are putting in a flag pattern here. Here's the move we had earlier in the day. And you can see that we're consolidating right in this area. Talked to my live room members earlier in the day about, get this out the way. Here we go. About if you're looking for a potential long in here, the opportunity to get involved is, there's a few techniques you can use. The best opportunity I would say to get involved is to wait for a retest of previous structure. So wait for this consolidation to come down, hit these lows again, and that way you can give yourself a massive amount of reward compared to risk. If you're getting long, say right here, you can have some very, very small stops in here. Again, this is just an example. Don't go and trade this. You can have some very, very small stops right there, and your reward can at least be to a retest of structure highs. You can see that's pretty decent right there looking at your risk reward. Now, I would be careful about trading a true, typically they say flag patterns, you can expect the market to extend the same length as a pole. I personally like to use my Fibonacci tool, so I'll throw in a Fibonacci extension and look for that 127. Let's see where that comes in at. A little bit higher. You want to be careful because we are still at weekly resistance right here. There's a big zone on the weekly if I zoom out. There we go. And I don't know whether that's gonna be right at the top of the weekly. So I guess you could shoot for that 127. But there's an opportunity for those who, I don't want to say missed it because it's not a revenge trade. There's another opportunity for a potential long on Canada. We do have some more Canadian news coming out tomorrow. I believe it's CPI. We have dollar news as well coming out. So something to check out. And you never know. This could be the start of distribution. Smart money could be taking advantage of all the traders that tried to hop on late, and we may see a big dump off. Yep. Boom. This could be another accumulation phase. Smart money maybe wrote it up. They still like it long, and they're saying, okay, well, let's sell a little bit, take a little profit, and let's slowly accumulate more, and then boom, shoot it right back up. Here's the thing. Like I said earlier, we never know. You never know. It all looks the same. Distribution, accumulation, it all looks the same. And you don't know what it is until after it has happened. But something certainly to keep an eye on. If you don't have a rule for trading this, trade it in a demo account or just paper trade it. If you do have a rule to trade it, then of course follow your rules and don't listen to anything I say. All right, so thank you for joining me once again for another wonderful weekend review video. Before you leave, I have a big favor to ask you. See, earlier in the year, I set out a goal to reach 10,000 subscribers on my YouTube channel by the end of the year. Well, I'm just about at 9,000 right now, and I decided to increase that goal. Instead of reaching 10,000 by the end of the year, I want to reach 10,000 subscribers by the end of the summer, so the beginning of September. But I need your help. You guys are the only ones that are going to be able to get it done for me. So do me a favor. If you are new to this video and you're watching for the first time, hit that subscribe button. If you're someone that watches every week but just hasn't subscribed for some reason, do me a favor, just hit that button. You're not going to get bombarded with emails. You can turn all that off. All you'll get is a little notification, I think, on the left-hand side of your YouTube that says, Akil posted this many new videos. And sometimes I put out random videos like the one I did earlier in the week today called a 200 pip trading day. So you want to be aware of that and you want to be notified first thing when that comes out. But also for you guys watching on social media, YouTube, Google, TradingPower.com, over on TradingView, do me a favor, head over to the YouTube channel. Hit the button, share it with a friend. I know you guys have trading friends. Say, hey, this guy has cool looking pants. He puts out nice videos and, check him out. Spread the word, please. It does me a big favor. So I don't ask for much. But I am asking for that. So until next time, guys, plan your trade, trade your plan. Have a great weekend, and I'll see you guys next week.